We're now about 13 hours away from what could be one of the most impactful financial events of the year. As we edge closer to this critical moment, Bitcoin is showing a modest gain, up around 2.9%. Nothing massive, but still notable. We'll talk more about that shortly. The bigger picture. We're seeing green across the crypto market, with a lot of altcoins beginning to climb in anticipation of what's coming. But here's where I start to get a bit cautious. Let's talk Bitcoin. Right now it's trading just shy of $97,000 after hitting a high of $97,600 earlier today. That sounds bullish, but it's also a red flag for me. Why? Because every time we get close to an event like this, traders tend to pile into leveraged positions, hoping to ride the volatility. The risk? A potential liquidation cascade that could shake up the entire market. This is happening right as many altcoins are lining up for big moves on their USD charts. The issue? A lot of these coins are bumping up against major resistance levels. And that's where my concern grows, because when we enter a hype-driven rally right before an uncertain event, it often ends with a sharp sell-off if the outcome disappoints. You've probably guessed the event by now. It's the Federal Reserve's upcoming decision on interest rates. Whether they cut or hold rates steady, this announcement has everyone on edge. We'll dive deeper into that in a minute. But first, let's zoom in on XRP. XRP is currently up around 2.5%, not a big move. If we look at the 7-day and 1-month charts, XRP has been consolidating, with price action basically moving sideways. It's been squeezing tighter and tighter, and you can feel the tension building. Everyone's waiting for a breakout or a breakdown. So here's the big question. What are the chances that XRP actually breaks out and hits a new high from this level? Right now, in the short term, meaning the next few days, the odds don't look great. And that's mainly because of Bitcoin's behavior. Don't get me wrong, I'm not bearish on XRP for the rest of the year. I'm just being realistic about the next week or so. Looking at Bitcoin's daily chart, we're still in an uptrend. Structurally it looks solid, but we're sitting right on top of a strong resistance zone. Until we push past that and hold above $100K, and ideally above $102K, the January 7th high, I'm staying cautious. That level is a key marker. If Bitcoin clears it, we're looking at a major signal that the bull trend is back in full swing. But we're not there yet. And while the market feels bullish, we're still dancing on resistance. That's where things get tricky. What's important now is to watch how altcoins like XRP behave. They're approaching what looks like a major breakout point, but that breakout could easily go the other way. Yes, we could see an impulse move, but don't rule out the possibility that the move is downward. Why? Because if liquidity across the market starts to dry up, especially if a bunch of traders are using leverage and get caught off guard, we could see a wave of forced liquidations. That kind of liquidation event can send Bitcoin into a rapid drop, dragging the entire market with it. And let's not forget, Bitcoin dominance is currently at 65.2%, which means its movements heavily influence everything else. Right now, Bitcoin dominance is sitting at its highest level since January 2021. Let me just pull up the 1-week chart real quick, so we can zoom in and take a closer look. Yep, this is the strongest Bitcoin dominance we've seen in over 3 years, currently hovering around 65%. That's a pretty significant milestone, especially as we're heading straight into a major resistance zone across the market. And today is no ordinary day, it's FOMC day, when the Federal Reserve announces its latest policy decision. The big question on everyone's mind is, will they cut interest rates? That's what the market wants to see. But if the Fed holds rates steady or surprises with a less favorable tone, we could be looking at a sharp market sell-off. This would hit altcoins especially hard, mainly because of how high Bitcoin dominance is right now. If Bitcoin does start to drop, it could really mess with the structure of many altcoin charts. Zooming out to the 3-day chart, there's a clear gap forming between $88,400 and $93K. That's an area where Bitcoin could potentially fall to next, if it breaks below a key trend line. The key level to watch is $94K. A break beneath that level, especially if we see a daily candle close under $93.7 thousand, would likely confirm we're heading toward that lower range. But again, this isn't something we predict all at once. We take it day by day, especially with the Fed announcement just hours away. Now let's talk about probabilities. At the moment, the chances of a rate cut in May are sitting at a very low 1.7%. That's almost laughable. Even on Polymarket, retail investors are giving it just a 2% chance that the Fed makes a move today. The overwhelming 98% are betting that rates stay the same. Could that tiny 2% chance actually happen? It's unlikely but not impossible. If it did though, the impact would be huge. It would shock the markets, crush bearish sentiment, and likely push Bitcoin well past $100K. A rate cut today would instantly flip the script and put crypto back into a strong bullish trend. According to CNBC, there's a 1 in 3 chance that the Fed might cut rates in June instead, and that's where my attention is. Powell could still surprise us today, but if you're planning ahead, June is the window to watch. Right now, the probability of a rate cut in June is about 31.9%. Some traders expect a 25 to 50 basis point cut. Personally, I think if we do see a cut, it'll be closer to 50 basis points, but that's just a guess until the announcement drops. There's even a tiny 0.9% chance being priced in for an even more aggressive cut. But beyond all the speculation, my main focus remains on how the Fed moves today. This is shaping up to be one of the most important days for the entire financial market this year, and I'm not just watching the Fed. I'm also closely tracking the global M2 money supply, the total amount of money circulating in major economies, because it's a key factor in understanding where inflation, liquidity, and asset prices are headed next. I've been mentioning it for a while now. Markets need more liquidity, and that remains 100% true. Liquidity is the lifeblood of the financial system, and Bitcoin tends to mirror liquidity trends very closely. I've also talked about Bitcoin's 4-year cycle and why it exists. It's not just random, it tracks with broader liquidity cycles. Historically, these liquidity cycles occur roughly every 4 years. Interestingly, this timing lines up almost perfectly with both US presidential elections and Bitcoin halving events. Some people think Bitcoin was designed to follow that pattern on purpose, but really it's just been a consistent coincidence since Bitcoin's creation. So when we talk about this 4-year rhythm in the crypto market, what we're actually tracking is the flow of liquidity. Of course, this pattern could shift at any time, but for now it's something we watch closely. That's why I've been focusing on M2 money supply, essentially how much money is circulating. China has already taken the lead in this area. The European Union and Japan are now starting to ramp things up as well. The spotlight, though, remains on the United States and how the Fed decides to act next. Recently, there's been a lot of chatter about the Fed's behavior, especially in connection to interest rates. While some expect rate cuts, others believe the Fed is injecting liquidity to avoid having to lower rates at all. Just recently, the Fed made headlines by purchasing $20 billion